Larry, my trading warrior brother, how are you?
Good, Dale. How are you doing?
Doing good, Larry. So, we were just talking about your style. I say that you're a very good tactician, and Blake talks about your objectivity in the market. With you follow your rules with your moving averages, etc. And so it'd be great to have you here because do you think we had a little shift in the last few weeks and Friday give you any kind of message or just write it off to option expiration?
It's a good question. Friday, I'm not sure yet because the week going into Thursday morning, the week was going pretty well.
Yeah.
S&P was higher for the week. NDX was higher. Thursday was an 80% up day in both of the indices. But then Friday, they just took everything down. So I don't know yet. We're going into the next 2 weeks. I think everybody knows by now. Traditionally, the next 2 weeks are pretty weak seasonally.
Yeah.
Now, that doesn't mean that it's going to happen this time, but I will say that they really stopped the two indices in their tracks on Friday. So I just want to see what happens today. I think bond yields in the US dollar are really the big story.
I agree. And looking at this S&P chart, is it you have to respect how well it's held up for up until now with a strong dollar and higher yields.
Yeah.
So what would happen if those reversed is what, it would probably really fly. You have any expectation? Go ahead.
Well, so bond yields, the 10-year, it's right up at resistance, 433 in October, 436 recently. So the Fed, the market is pricing in no Fed rate hike on Wednesday. But I just really think it's going to come down to bond yields. If bond yields fail here and they can't get through 436 and they either stabilize or start to pull back, then that's, better for stocks. But if they break out for whatever reason, then, it creates a lot of weakness.
Okay. All right. And they've been trading like, the yen and yields trade hand in hand. So this is a big week for rates. And because when I look at the TLT, and I'd like your opinion, Larry, like the weekly TLT.
Yeah, let's dial that up.
Still looks ugly.
Yeah, it does still look ugly. It's it's the exact opposite of the bond yield chart. So TLT, it's just in a downtrend for me. And I know that a lot of people trade shorter term, and I get that. And there's probably some opportunities that could be here. But for me, from a trend perspective, unless TLT is over 108 to 110, there's not a lot there for me. But it could bounce. The biggest question is what's going to happen with bond yields. And I could sit here and make an argument on both sides.
Yeah, with the 10-year, it's easier to make the case that they're about to come in. But you look at the long end and they still look like we're going to gun for those October lows. So here's what I'm thinking, Larry, that if yields are going to slow down or start to come in a bit, that it's more on the short end than the long end. And actually, you have experience. I want to ask you this. Everyone's been worried about the inversion for forever.
Oh, yeah.
So that could be steepening action with the front end rates coming down faster or stabilizing, but long end rates keep going higher to take out that October low. Wouldn't that be yields steepening, the curve steepen?
I've got to tell you, it would, but most of the time I pretty much have like some type of a basic view, long or short, that I can put together based on the charts. And I've got to tell you, as far as the bond market goes, I don't, if bond yields were 20 basis points higher or 20 basis points lower in 30 days, it wouldn't surprise me, but I really can't sit here and tell you that I've got any real technical insights as to which way it's going to go. The 10-year chart itself, if the 10-year chart was a stock, I would buy it, right?
Okay.
It's in an uptrend, weekly moving averages, but I will tell you that this 436 resistance, it's pretty major resistance.
Okay.
You know, with the Fed's probably on hold right now, at least for Wednesday. I think the market's pricing in, you know, maybe 25 basis points in November, but nobody knows. It's based on how the data comes in. Last week, CPI was higher, but core was lower. And I'm just a little bit more defensive. I've got a little bit more cash, not too much. And I'm holding energy is one of my biggest positions, but tech is also one of my biggest positions. So I'm a little
semis.
What's that?
Semis?
No, I've got Triple Q, I've got Nvidia, but I've got Google, which was a recent buy, you know, in communication services.
One of the Magnificent Seven that's still holding up. I don't think that I think a couple of the Magnificent Sevens lost their duels. I think Apple and
Apple's the weakest. Nvidia is weak. But then, you know, Google,
Microsoft failing rally.
Yeah, you know, it's not
Microsoft.
Tech is not the strong in the big seven. It's Google, which is communication services. It's Amazon in discretionary. And I'll tell you, my favorite chart here.
I'm short Amazon from last.
My favorite chart here. If Triple Q, if it turns up, right, is Tesla in that group. But here's the thing. I don't know that Triple Q is going to turn up. So I've got a smaller Google position. I've got some Meta for, you know, the past 6 months. We've got some Nvidia for a long time. But no, there's a lot of weakness. The Nvidia chart is weaker. You can tell just by, you know, very, very wide ranges. And I don't like to see the very wide ranges, especially near the pivots, because that usually indicates a lot of weakness. But, you know, Nvidia is weaker. Apple's definitely been weaker. And Apple tried to turn it around. But then with the China, you know, restrictions, it created some weakness. But listen, I've been over the past 30 days, I think I've had the least activity as far as buys and sells of any 30 days over the past 18 months.
Okay.
Because I just don't know.
And what's that usually a precursor of? When you're inactive like that, it doesn't tell you what the outcome's going to be.
All it tells me right now is, you know, like energy's in a strong uptrend, but energy could be a little bit extended, especially crude oil. You know, crude's had a run from 77 to 90 recently, but the weekly crude chart is a great chart. The 40 just turned up. Everything looks good here. But in the short term, after 77 to 90, if it pulled back to, you know, 85, it wouldn't be bad. It wouldn't be unexpected. But, you know, there's just a lot of uncertainty on the. I liked the industrials quite a bit, and then they pretty much got taken down really sharply last week.
Yeah, what a key reversal.
Yeah.
The uranium sector has been performing. Have you do you trade issues in that sector?
You know, we've had it on our buy list. I don't have any uranium. I've got a lot of XLE and I've got some Schlumberger, but uranium's been very strong.
How about the weed stocks have come out of their hibernation?
You know, they have, and it's a good chart. It's not a group that I follow too closely. But the weekly chart looks great. Now, it's gone from 5 to 9. So it's important for your listeners that when I say something looks good or bad, I'm looking more, weekly time frame and, the 2 to 4 month trend. I'm not
because
looking so
they've
much short
doubled.
term.
So
Yeah.
it's hard
So
to buy a double.
yeah. So, could it pull back from
volatile.
here? It could, but if you look at the long-term trend, I mean, the volume is massive. First time
massive.
over the 40-week. Yes, I mean, there's a lot of money that's coming in there. So I think it's one, if I was trying to get into a group like that, I would probably buy small and then wait for a pullback to try to buy some more.
Okay. Anything in the miners?
In gold miners?
Yeah.
Not yet. I think, and you guys are a lot better with gold, than I am, but I really think that until bond yields come down and the dollar comes down, this is just a choppy group. There's probably a lot of trading opportunities, but if you look at the trend, the weekly chart's just a tough chart.
Okay. All right. So home builders have been leading the way. They've been one of the strongest sectors, Larry. I think last time we were on, I think you were long some home builders.
Yeah.
They've given up the ghost a little bit.
Yep. Yeah,
So
there's a lot of things I think to be a little bit more cautious about, at least right now, like home builders. If we look at the black line, it's the 20-week moving average. It had held that going back to last October, closed below that bearish moving average cross here on the weekly. So the home builders, I think, are showing some caution signs. Semis showing some caution signs right now. But, if you look at the weekly chart for semis, if we look at it, it's at the top end of the range. There's support at 143. This, Dale, I've got to tell you, this is the macro environment is probably the trickiest of any that I've seen in 25 years.
Well, that's saying a lot.
Yeah, because you've got inflation that's still very high. The dollar has been breaking out, but then the yield curve is extremely inverted and there's a lot of fear of recession. So, I mean, you've got two trains going 100 miles an hour in separate directions.
Yeah.
And I don't know what the answer is.
Yeah.
What's that?
So it's kind of like it's bifurcated.
Yeah.
It's hard to have a bullish narrative in this environment.
It's
except for momentum.
Yeah. Energy is very bullish.
Yeah. Okay. I hand you that.
Yeah. The energy group, you take a look at charts like Schlumberger, strong charts, the oil services holders. If you take a look, let me just dial this up for 2 seconds, but the oil services holders is breaking out. If you look at that monthly base, right?
Yeah.
Goes back to 2019. But, here's the thing. I don't think you can have strong energy, a strong dollar, strong bond yields, and have a recession. So one or the other is going to win out.
Yeah.
You just can't have all of them. So, but right now, energy, bond yields, and the dollar are all trending higher. So we might get.
Go ahead, Larry. I was wondering on your dollar chart if you had any upside targets or what you saw coming. It's been pretty relentless. The dollar hasn't given people pullbacks. What's it telling you?
It's in a strong uptrend. 1040 just crossed to the upside, at 105.35 on this chart. Probably the first target, just by looking at it, 105.90. But it's trending. It's got a big base.
Yeah.
And I don't know
why
a
pullback to 103. You would love to see a pullback.
Absolutely.
Everyone would, and then they'll be afraid to buy it or it won't happen.
Yeah, that's how it normally works.
Yeah. Okay, that's a nice looking chart.
It's a great chart. And I don't, if you would have told me that the dollar would be breaking out and crude oil would be breaking out, I wouldn't have thought that, but that's what it is.
Demand for dollars because it's still paid for in oil, still paid for in dollars.
Yeah. Yeah, that makes sense.
So sometimes the dollar weakens during a weak crude market because there's less dollar demand. Anything else standing out to you? I think we've covered a lot of ground. You probably had some things that you wanted to talk about before I started steering this thing.
These financials
Okay.
are starting to break out. Like if you look at
Yeah.
CME Group on the weekly, look at that. The weekly base is very strong. If you look at KKR, weekly base is very strong. So the financials.
But that's not a bank. KKR is a bank?
No, KKR is private equity.
Oh, okay. Okay.
Yeah.
All right. Because the banks, actually, Larry, a guy that I talked to was talking about do you watch option sweeps? There were a lot of option sweeps coming into the Citicorp of all of them last week, and they're buying the calls out to January. So there are a lot of people that agree with you. Sometimes those option sweeps are pretty good tells, aren't they? Or you don't want to fight them.
Yeah, if you look at Citi, $40 on the Citi chart, I mean, going back to 2018, it's right at the bottom end of this. A lot of support down there, and the banks were strong. Last week, Citi was up 5%. JP Morgan was up last week. It was one of the strongest sectors. The S&P was down. JP Morgan was up 3%. But
they're rotating here. Why would they rotate into the banks at this stage?
I don't know.
Out of tech.
I don't know. But this CME chart is really look at the CME chart.
Yeah, great exchange.
It's got a ton of support at 200. 200 goes back to 2022. You've got the 10-week moving average at 199. It's got a ton of support, 197. It's a really good chart.
And that's just about trading volume.
Yeah. Maybe because, maybe it tells you there's some more commodity moves coming.
Yeah. Well, the S&P was, anyway, a lot of their contracts.
Yeah.
It's all about volume there. So there's plenty of trading going on.
Yeah.
I do have, one of our regulars, Alexander, would like to know what your view is on Oracle after it got hammered on earnings last week.
The weekly bar is really difficult, but it closed back over 110. It filled this gap. There was a gap a few weeks ago. It filled that gap. If I was looking to do something with Oracle over 110, I like the chart, but I'd have my stop right underneath last week's low, 107 and change.
Okay.
So it's, they pretty much washed it out. You can see the weekly volume was high, washed it out. If you take a look on the daily chart, it's going to be like anything right now. It's going to be a little bit more of a speculation. So what I'm doing for things that I buy right now is I'm just buying half size positions.
Mm-hmm.
And I want to get through the next 2 weeks. But Oracle was super strong. Their quarter was not that bad, but the market ran up 10 or 15% into earnings. So, from a speculation, I like it here. I would do a small position and I'd have a stop under the recent low.
In a New York minute, everything could change.
That's right.
Don Henley.
Yeah, that's the truth.
How about for me, Larry? What would you do with Apple? I'm a bear in Apple.
Yeah, Apple's a tough chart right now. So I don't have any long. The trend right now.
Would you buy it at 120?
At 120, I'd have to. I mean, at 120, probably, yeah.
Okay.
Yeah.
All right. Okay.
That's the weekly support, right? 123.
Yeah.
It's a tough chart. This Google chart. I don't know why the Google chart has been as strong as it has been, but it has been. Even last week when everything got taken down, it was higher for the week.
It's the last one standing. I mean, look at the 2 days Amazon put in late last week. It's threatening moving averages now for me. Look at it's going to be under your double band pretty soon. But
Yeah.
that was a pretty lousy week. It wasn't a reversal week, but from where it was, it cleaned out all the shorts over 43.63, the July highs,
Yep.
and failed.
Yeah, it gave back. It definitely gave back a lot.
Yeah. Okay.
I don't, like I said, Dale, I can normally come on here and tell you, I think, in 30 or 60 days here.
110 Amazon by the next time I talk to you.
Okay.
All right. So
yeah.
Anyway.
I'd probably buy it down there if it gets there.
Yeah, I would too.
Yeah. Cover your short.
Here's what I think is the most consensus narrative, that we could have a 5% correct, 5 to 10 if you're real extreme correction, and then we'll be at new all-time highs by early next year.
That is the consensus. I would agree.
I hope it stays the consensus, because I know there'll be a rally from 4,200 if we get down there. That's a battleground, right?
Yeah, 4,200 is the big number.
But something interesting, even the people I talk to that are, short-term bearish, looking for a correction, I don't even ask them this, Larry, but they always seem to want to come out and qualify that even though they're bearish, they go, but I'm not looking for a crash. But I'm not looking for a crash. I'm not even asking them, are you looking for a crash?
Right.
So people are, you know what I mean? That's been kind of wiped out of the sentiment. In fact, people are embarrassed to even be associated with looking for a big decline.
Right.
Which makes me think it's possible, because people are coming out saying they're not saying it would happen. Do you know what I'm saying? The psychology.
There's very few crash bears out there.
Yeah, because they all crashed.
Right.
Especially in July. I know. I lived through some of that. Okay, great, Larry. I mean, real nice looks. We'll see what happens here. I think maybe we're going to have one of those Octobers, huh?
Yeah,
you've seen a few.
Listen, October, traditionally October through December are usually pretty strong. What did we get? The last major low was last October. What is it? Yeah, October 16th or something on the chart. But I just want to get through September right now.
Okay.
You know?
Well, you will.
Yeah. No, we definitely will. We definitely will.
So the best place for people to get in touch with you at LMT 978.
Yep, at LMT 978 on Twitter, my website, Blue Chip Daily, and also on YouTube, also at Blue Chip Daily. And we've got a really good bunch of instructional videos on there. Just, me, Dale, I'm all technicals and I don't get into the news and predictions and all of that.
Yeah, and you're very measured. I never hear you really get carried away with any narrative. You just talk about what the charts are doing. You're someone who lives the expression, price is king.
That's it. The market knows a lot more than I do.
Larry, pleasure having you on, and it was great batting the ball around with you today.
Dale, thank you, my brother. I appreciate it, and I look forward to talking with you soon.
Okay, I'll talk to you in December or so. Okay, buddy?
Thank you, Dale.
Have a great fall trading season, Larry.
You too, my friend.
All right, buddies. Larry Tentarelli, everyone, at LMT 978, who joined the team in about 17 minutes on the Morning Edge. We'll be with you all week, everyone. So good hunting today. See you tomorrow. Turnaround Tuesday. Oh, yeah. Don't just count your pips, count your blessings. Adios.
Hey traders, this is Blake Morrow with Forex Analytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.